What is up, my fellow apes? Hope y'all have had a wonderful weekend. Today, we got to talk about AMC. We'll cover the short interest through Ortex. We'll cover it through Stonko Tracker. We'll cover the Bloomberg article that we need to talk about. But first and foremost, we need to talk about what Michelle Lee said on Friday. And I'll link the video down below. But basically, Michelle Lee was talking with another reporter on CNBC, and they were talking about heavily shorted stocks, and he was describing the phrase that she ended up saying on national television. This is a rather big deal because it's kind of hard to prove what this phrase is and prove its context, essentially. But he was talking about it, she said it, and now that phrase has been trending on Twitter in my area for the whole entire weekend. And if I open up my Twitter feed, it's literally 5 out of the 10 tweets that I look at have that hashtag at least attached to it, which is big, guys. And what this is going to help us do is carry that bullish momentum from Friday into Monday. And it's also probably going to cause a lot more people to look up this phrase and be like, well, what is this going on here? How's it related to all these heavily shorted meme stocks kind of thing? And it's probably going to add more apes to Ape Nation. And guess what? More apes equals moon, here we come kind of thing. In my personal opinion, I think we're going to go to freaking Pluto because I think Pluto would be awesome to visit. Might be rather cold, but hey, we can enjoy a nice moon pie together. Also, if you guys can, do me a huge favor, drop a like down this video, hit that subscribe button, make sure that you ring that bell. It really does help me out with the YouTube algorithm a lot. But let's dive into the charts here, and then we'll take a look at the short interest in Ortex. But the thing that I really want to focus on here during the intraday is this move from about 10:30 to 11:30. It's about an $8 move from about $49 to $57.48. And what this indicates is that the bulls were very much in control during this time period. And as soon as we hit that high, and you notice that we get a double top here at 57.48, we got pushed back down. Now, the thing is, this shows that the bulls are still there. We still have absolutely bullish sentiment behind it. The stock, yes, has traded less volume, but that's because turning over 700, 800 million shares day after day after day is so incredibly hard kind of thing. And it's exactly the reason why I'm kind of happy we had the weekend, is because now everyone's going to be refreshed and ready to hit it on Monday and just hit the ground running. Now, the thing that I want to talk about here is the 1 month, 1 hour chart, because we have a nice bull flag going on here. And what a bull flag is an ascending level of support and a descending level of resistance. In my ascending level of support, I selected the 3560 here on the second. And it's really before we had our nice run up here, 100% day on the second. The descending level of resistance, I selected our all-time high all the way down. And what we're looking at with this bull flag is typically a break to the upside. Bull flags can, yes, break to the downside, and I'm going to give us both sides of this. But what I'm going to be looking for in the next trading day, or it could be in the next trading days if we consolidate tomorrow. But if what we're going to be looking for is a move during the pre-market to like 49, $50-ish during the pre-market tomorrow. During the intraday, I'm going to lower it a little bit to $48. But if we can get that breakout and then get through that psychological resistance, which I have drawn up here, of $50, I think we could really start running to the upside. And what I really want to see is when we make that breakout, I want to see it follow through with volume. If we can follow it through with volume, then we're definitely going to be cooking with some nice butter and we'll be running with it. And we'll be nice and smooth because we'll be moving and we'll have the volume behind it. If we don't have the volume behind it, it may be a false breakout in my personal opinion. Now, if we do break out to the upside, like I said, 48, $50-ish, that's where I'm looking pre-market intraday trading. To the downside, I'm really going to be looking around $32.60. Yes, I know that is a very, very far move to the downside. But in my personal opinion, guys, I definitely think this is going to be a very strong level of support. $40 is an kind of level of support for us. So I'm really going to be looking at $32.50, $32.60-ish in my personal opinion. Now, if you guys are worried about what's been going on for the past couple of days, I need you guys to do me a favor. If you have Webull, if you don't, click the link down below. You get 2 free stocks when you join Webull. One when your account's approved, the other when you deposit $100 on the platform. And you those two free stocks can be valued between $8 and $2,000. And I do get a free stock as well because you did use my referral code. But it gives you this wonderful charting software. And when in doubt, guys, zoom out. Zoom out, because in the past 10 trading days, we've gone from $12 to an all-time high of $72 to closing Friday at $43.72. So we've almost 4x'd in the past 10 trading days. That's crazy, guys. If you think about it, that's an insane move. So just when in doubt, zoom out. The other thing that I want to point out here is the RSI and the MACD. Take these indicators with a grain of salt, because they're only looking at the candlesticks. They're not looking at shorts cover. They're not looking at anything else. They're only looking at the candles. So these indicators, in my personal opinion, are completely irrelevant. Now, let's hop over here and cover the short interest in Ortex. And then the last thing I'll talk about is the Bloomberg article. But we did see a decrease in the short interest change on Friday. So we have our T+2 settlements. You have your transaction date plus 2 days for your settlement kind of thing. So we're seeing the short interest change from Wednesday of 21.73%. And this is when we had our 100% day, which definitely does line up. We see that 33.5 million shares were returned, 3.4 million shares were borrowed, and we have a borrowed change of 30.1 million shares. Now, our current short interest or free float is sitting around 17.45% up here. And we still have a shares on loan of 138.55 million. That is an insane amount of shares, guys. That is a lot. And our estimated current short interest, 69.81 million shares. Let's just round it up to 70 million. So between our shares on loan and our estimated current short interest, we're looking at 200 million-ish shares. That's a lot of short interest. So yes, we have seen a lot returned, but there is still a lot of short interest out there, guys. 17.45% is an incredibly heavily shorted stock and still can absolutely squeeze. Yes, we have seen our days to cover drop because our volume has drastically increased over the past couple of days. So our days to cover is naturally going to drop because it's easier for shorts to cover in a very, very high volume day. Now, the other thing that I want to really talk about here is what's called the on loan average day. And what this is basically measuring how long ago did short positions take out their loan. And if we take a look here on Thursday, it was 50.19 days. So we're looking at mid-April-ish kind of time frame. And that is huge, guys, because AMC, if we go back to like mid-April, was trading at $9. $9. And now we're sitting at 43, 47, whichever one you want to use. These short positions have to be so incredibly under the water and like so red, it's not even funny. And that doesn't even account for the cost to borrow fee of 7% annually that they had to pay. So they're losing monies. They're losing monies out of their yin yang. Like, it's crazy, guys. Like, certain things are going to be calling eventually if the stock goes back up, in my personal opinion, and can sustain that. Like, I personally think something's going to be calling, and we're going to start seeing some covering going on if we can get back up to those higher digit numbers, because it's really going to put the pressure on. And the next thing that I want to talk about is Stocko Tracker 2. We currently have 114,040 calls in the money. At $53, we add another 23,610 calls to that. We have 1.7 million shares that are available to borrow at an 11.2% fee. We have 45,297 short ETFs that are available. Now let's go back over here in the Webull and take a look at the options chain. And the options chain for this week has absolutely been stacked, guys, between $38 and $47, stacked. $50, we add another 12,181 calls in the money according to Webull. And if we take a look here at the $145 strike, 15,201 calls are still open interest. We saw 64,599 calls traded at this strike at an average on the ask of $2 $839 or 2.39. It's crazy, guys. That is a lot of money for a very far out of the money option. And the last thing that I want to leave you guys with is Wall Street reins in hedge fund short bets on meme stocks. I'm going to include this link down below in the description of this video. But basically, we know that Raymond James and Jeffries have restricted short shares kind of in some way, shape, or form. Well, this article adds on to it, and I'm going to read it out to you guys. Goldman Sachs Group, Bank of America Group, Citigroup, and Jefferies Financial Group Incorporated are among firms that have adjusted their risk controls at prime broker operations according to people familiar with the moves. The banks are trying to protect themselves against fallout from extreme surges and dips that have characterized trading in companies including AMC, Microvision, and GameStop. The changes mean that some hedge funds and other institutional investors now face higher collateral requirements or are limited from shorting certain stocks, the people said, asking not to be identified discussing internal policy decisions. Until further notice, this is said by Jefferies, Jeffrey Prime brokers will no longer offer custody of naked options. In GameStop, AMC, and Microvision, the firm said in a memo to clients seen by Bloomberg News, naked options allow investors to short a stock without owning the underlying securities. Jefferies, which told clients that other stocks may be added to the list, will also no longer be permitted short sales on those securities. Representatives from Goldman Bank, Bank of America, Citigroup, and Jefferies declined to comment. It is not unusual for banks to adjust their risk controls as market conditions change. And this is huge, guys. This is huge because what this is taking a look at is shorts are going to start having a problem finding short positions that they're going to be able to go, hey, prime broker, I want some short shares. They're going to go, nope. Or what's their cost to borrow fee? It's going to go through the utter roof, guys. It's going to go through the roof. So we could definitely see that going on. And shorts may have to essentially start covering because their cost to borrow fee is so high, or they can't find any shares. And as the price continues to rise, the pressure only raises on the short positions more and more and more. But really, guys, that's what I got for you guys regarding AMC. Hope you all have had a wonderful weekend. Let's see how Monday goes, and I'll see you then. Peace.